Prospector News is media for educational purposes only and should not be construed as advice. We are not a certified financial analyst, licensed broker, or fund dealer, exempt market dealer, or hold a license to provide financial advice. We provide no legal opinion regarding accounting, tax, or law issues. Nothing in this podcast should be construed as investment advice or the solicitation to buy or sell stocks or commodities. All opinions expressed are those of the participants and should not be relied upon when making investment decisions. Those decisions should be made with the advice of a personal financial advisor. If you have enjoyed our podcast, please hit the like and share buttons and be sure to hit subscribe. I'm Michael Fox, and this is the Prospector News Podcast. Joining me today is Joe Kizis, president of Bravada Gold. Welcome to the Prospector News, Joe.
Well, thank you, Michael, for having me.
Pleasure. We've been watching this program for quite a while, and we're really excited to find out what's going on. For those people listening that haven't come across Bravada Gold, let's start off by giving them the quick elevator pitch as to what you are and what you're doing.
Sure. We're a group of explorers. We're part of the Mannix group of companies. And so, they're based in Vancouver, and that's where we get most of our legal and accounting and, that sort of activity, IR. But really the focus of the company is in exploration, and specifically exploration for gold and lesser so for silver in the state of Nevada. And the reason we picked Nevada was one, I've worked here for many, many decades here now. And so it's an area I'm familiar with, quite intimately. And I've worked in precious metals. It's, really precious metals are the easiest thing for a junior to deal with because you don't have to market it. The price is set. You don't need a marketing department or a sales department. So it really does focus on the exploration. The deposits also tend to be a little bit smaller than, say, a big porphyry copper that might be in production for, dozens and dozens of years. These things are a smaller time period to extract the mineralization. And so you have to make a lot of discoveries. And so there's an opportunity for juniors, because the majors that used to take that sort of all-in approach where, they would have a large exploration team and a development team and then a mining team, they pretty much focus on the more advanced projects, things that the juniors are exploring. So there's a real opportunity for those of us that have been in the business for quite a while now and have had some success in finding new and exciting deposits. So the approach we took early on was because this is a bit of a numbers game. We analyze properties and we select those that we think are going to do two things. They're going to have a great margin. That usually means a high grade, right? But it also means things like the type of mining. So an open pit oxide deposit in Nevada, at 3 grams, that's high grade. I mean, that's a money machine typically. Obviously, you need to know something about the strip ratio and the engineering and the, that sort of thing. But, those are the features that we kind of focus on are the, the grade and more importantly, the margin if you do produce from a property, and then the size, because, really to permit a small mine, it's almost the same amount of effort as a larger mine. So, and the big companies that are mining at, 100,000 ounces a year on several projects, trying to replace that with exploration, they need big deposits. So our focus is in an area that's one of the world's best places to make a discovery, that being Nevada. There certainly are a lot of examples of great deposits, and they continue to be discovered. And we have a pretty good success record in exploration. So it's an opportunity we're exploiting.
Perfect. Of the projects in Nevada that you have, there's a number of them, but the one that seems to stand out in my mind is the Wind Mountain project in the western part of the state. Can you tell me where that's located and what's it like on the ground there?
Yeah, sure. Yeah, it's a great place to mine because it's close to Reno. It's about an hour and 40 minutes drive from the airport. So, just to even visit the property is an easy day out and back. It's very, very sparsely populated in that part of the state. So it's in an area called the San Emilio Desert. There's basically a farm on the far side of the valley, and on the south side, there's a geothermal power plant, which is pretty handy. So it's very remote. There are a few small towns. If you've heard of the Burning Man uh, party, basically in the summer, late summer, early fall, it's near the town of Gerlach, and we're about maybe 30 minutes drive south of Gerlach. So very, very very great place to make a discovery, and easy place to work. There's not a lot of vegetation. It's in the snow shadow of the Sierras and the Coast Range a little bit farther north. So the amount of moisture is not very much. It's a project we can work all year round.
Tell me about the work you've been doing the past year there.
Yeah, we have sort of a two-prong approach. This is really our most advanced project. It's really our flagship property, and the reason is it's a past producing mine. It produced about 300,000 ounces from close to 500,000 ounces and about almost 2 million ounces of silver. So when we looked at this, we thought this is really the top of the system and not the bottom of the system. So a lot of deposits, you drill a little bit, you get out of the mineralization and you're done, right? They're small. This one is geologically something we understand is the top of a very big system. So you might imagine this as sort of the mineralization that's known is almost like the top of a mushroom, and we've really been looking for the stem. Those are the feeder zones. Those are the places that gold came from to form those more disseminated mineralized areas. So the gold didn't rain from the sky. It came up from deeper levels, and a lot of times the channelways are extremely high grade. Wind Mountain itself is widely disseminated mineralization, strongly oxidized. It's on the side of a hill, and so that's why it made money. It was cheap mining, easy to process, and it didn't take a lot of capital to get to the mineralization. It was essentially sticking out of the ground. So by recognizing that the stem of that mushroom hasn't been found, and this is a pretty big cap on the mushroom, so there must be a pretty good feeder zone in there, and that's been a real important part of our exploration plans in the last few years. That's really why we picked the property up from Agnico Eagle in 2006. They looked at the oxide mineralization and said, well, this is just not going to be big enough for us. I kind of agreed with that, although it turned out to be quite a bit bigger than I think we all thought. There's quite a bit of mineralization. It's all oxidized. Those would be the cheap ounces. And a portion of the deposit that we did a PEA on, a resource, so was much larger. It was close to 1 million ounces of about 60-40 indicated and inferred. That shallow mineralization is still profitable, or should be profitable. And what we're looking for now is sort of a dual approach. One is a portion of that resource is actually quite a bit higher than the rest of the mineralization. So last year we did a 13-hole program to determine if certain portions of the deposit that we thought we predicted would be higher grade would be in fact higher grade. We drilled those holes and we verified that higher grade resource does exist. So there is a portion of that larger resource that is probably as profitable or more profitable than the entire deposit, trying to make it a bigger mine, in other words. So that's great for a sort of a starter pit idea. And so that is what we're doing a resource update on. We'll do a global update, and then we're going to look at the possibility of doing a PEA on just that starter pit, because I think that'll be very, very attractive. So that's part of sort of the value of the company. The sort of the base case scenario is a small reasonably good deposit. But really the upside, I think, is still in the stem of the mushroom, if you will. Where is that high grade feeder? Now, that's based in part on analogies with other deposits, and there's quite a bit of evidence now that some of these deposits, there's two that have high grade feeder systems, and neither of those have been very well drilled out at this point. One is Highcroft, which has made the news a lot recently. They have a deposit called what's called the Vortex Zone, and they get something like 10 times the grades in there. They haven't drilled it out, so we don't know how big it is or how significant that will be for that deposit. Florida Canyon is another one. These are deposits that are almost identical to Wind Mountain. They produced some spectacular grades in a news release just a few months ago, multiple tens of meters of 8 grams, for example. Now, this is a deposit that's been in production, oh God, a couple of decades now. And this is something in the 0.3, 0.4 grams per ton range. So here's a very similar, large disseminated area of mineralization, and the underlying feeder zone that fed that shallower mineralization is pretty spectacular. It's probably sulfide, so there's some metallurgical issues that need to be addressed. So that's our second part of the program that we're preparing to do right now. We discovered the first banded vein zone, which is typically what a feeder zone looks like, and we got the first hole in it in, December of 2020. We had to permit some holes, and we came back the following May of 2021, this last year, and we drilled 4 holes to kind of follow out that mineralization. This is an area where the mine reclamation basically pushed one of the mine dumps over top of the area that that's hiding this mineralization. So it took a while to find it, but I think we're on the edge of the vein system. We clipped the top of it. It basically outlined where the strike of the vein zone is, and we had then gone and re-permitted or permitted some new sites that will allow us to drill deeper. And so that's what we're planning to do right now. We have a drill that's scheduled to show up late May at some point. I wouldn't be surprised with the delays we've been seeing with all of our contractors that it might actually not start until June, but sometime in the late June or late May, early June period, we should be drilling the deep holes on our feeder zone. So we're pretty excited about that.
Well, absolutely. If we find the gold deeper in the feeder, and it'll expand the life and increase the resource on the property. Now, speaking of the resource, you were supposed to have an updated resource in the first quarter this year. I guess you're experiencing the delays that everybody else is experiencing in the field with getting the engineers and stuff to do the calculations. Is that correct?
Yes, that's exactly right. We have, we thought we had a slot in January, and that got pushed back and pushed back. The engineering company actually hired a couple of new people, and so we'll be working with them in part with some of the group that has worked with us in the past. The group that we originally had the PEA done by was a company called Mine Development Associates. The reason we use that particular group is that they're very familiar with these type of oxide deposits, oxide gold deposits, heap leach operations. And they're known to be fairly conservative, and we wanted to start with something that was fairly conservative. They were purchased by a larger company, and so it's that larger company that we're now working with. Same engineer basically that did our initial PEA.
Just somebody different signing his paycheck, right?
Yeah, that's right. Yeah, no, so it's good because they're familiar with the project, and this should go fairly quickly once they get started. So we're supposed to have the kickoff meeting actually today, but I had to postpone it because of some other activities that came up yesterday, and had to switch around some scheduling. So
So
it'll be started.
the anticipated new resource in the PEA will be roughly July now? Is that
Yeah,
what
I
I'm
think
hearing?
we're looking at, kind of, I hate to give a date because, we have no control over how quickly they do things. But typically, the first thing you do is you get the resource update, and that should happen during the second quarter. And then the PEA will happen pretty quickly after that. And it will be either late first quarter or sorry, first, second quarter, or the early part of the third quarter. So, a few weeks behind the resource
Okay.
announcement.
And then after that PEA, they're going to move on to pre-feasibility for an open pit.
Well, what we'll
Correct.
do then is we'll take a look at the PEA, and most of that area that will fall into that is very well drilled. It's almost all indicated rather than inferred. So I don't think we're going to need any additional drilling. I think the resource will be fine just the way it is for a pre-feasibility. There will need to be some engineering work and almost certainly some metallurgical work before we were able to do a PEA. So there'll be a little bit of a time lapse between the PEA and getting enough information that we can go ahead and pull the trigger on a pre-feasibility. And of course, that's going to have to be approved by the board of directors.
I see. One of the things I always like to find is those other cash flows that help keep the dilution of the shareholders moving forward. Now, I understand that you guys actually have some oil on that property, and you've got to deal with a company called Baker Hughes to see some cash flow come from that. Is that correct?
Well, no, it's not the Wind Mountain project. It's a property called the Shoshone Pediment. And we originally picked that up from Placer Dome as a gold target, a deep gold target. But what we recognized was that there's a barite deposit that sticks out of the ground. And so we discussed that, and Baker Hughes, we did a deal with Baker Hughes where they'll produce barite and pay us a royalty. So their timing is really kind of start and stop, depending on oil production. But the deposit is about 6 miles from their mill site, and the deposit that they've been mining from for many years, the Argenta deposit, is basically played out. So they will need to get additional mineralization, and the mineralization on our ground extends onto their ground. So they're going to put it in production. The question is, when, how quickly. We have no control as a royalty holder on the barite as to when they need the barite, right? So we have to be somewhat patient, and we have no choice there. And just for your information, barite is used because it's inert, it's very dense and heavy, and so it's used to prevent blowouts in oil drilling primarily. There are other uses as well, but primarily for the Nevada sort of not the cleanest barite. That's primarily the use. So when the oil companies are drilling a lot, barite is in demand, and when they're not drilling a lot, then they don't use as much.
Hopefully there'll be drill this year with the high oil prices, and they'll be able to put that into production and cash flow for you folks. Yeah. So looking forward, what's the plans for 2022 beyond the updated resource and the PEA?
Yeah, well, like I say, there's the drilling that will start on the feeder target, the feeder mineralization that we've already identified. Just we've extended the strike length, so there's about 330 meters along strike that we've identified, but we haven't drilled it very deep. And the way these things work is it's typically more enriched in silver near the top, and that's what we're seeing. And then it should have a gradation downward into much higher gold values as the silver reduces. So that is exciting. We have a number of other projects. Now, we do a lot of joint ventures on projects. There's a lot of interest, but particularly from people outside of North America, it's been tough to get here. We have a Geological Society of Nevada symposium at the end of this month and into early May. So a number of people are coming here for that. We've got a number of property reviews that are underway where we've provided data to potential joint venture partners, and they'll finally be able to come and take a look on the ground what these projects look like. So I wouldn't be surprised that we get
a lot of that, hasn't it?
Yeah, it has. It's been challenging, obviously, but there's a great need for new discoveries. And basically the way we've handled most of our portfolio is we try to develop the projects to the point where there's some pretty obvious drill targets, and a lot of times we'll do some initial drill holes just to verify and sort of I guess verify is a good word to use the targeting, and then kind of turn it over to people to drill out the project and see either there or it's not there in some size. So we have done a lot of deals over the years. We've done over 30 partnerships with public companies and an equal amount with individuals to acquire projects. So we figure our real talent is taking data, developing targets that make sense, doing an initial drilling to kind of upgrade the value of that prospect. And then, at that point, we look at whether is it worth getting a partner? Do you get a deal that's worth having? And we've had a lot of deals proposed to us for Wind Mountain. And, I just don't see that it's in the shareholders' best interest to take those deals. So we haven't. And in this case, we're deciding to put some additional dilution to the company, raise some money, and do what we think is going to add more value than we're taking away by diluting the shareholders. In other words, we're adding more value than we're spending with our shareholder or shares.
Perfect. In wrapping up, what else should shareholders know about Bravada and things moving forward?
Well, I think it's a good opportunity right now. Every boom period has its, I don't know, I guess, the darlings of this. So, the last, let's see, I'd say the mid 2000s, even in 2010s, people were looking at things like Wind Mountain, where there was, there's some mineralization and drilling them out. I mean, we've specifically picked this up because we were looking for a type of mineralization that wasn't known, but we had predicted, and that was the feeder zone. As we were doing that, we realized, well, there's a lot more gold. Okay, so that's that opportunity for new groups coming in. They're going to find that a lot of the projects that have already had significant work done on them are, have something that's an issue. So either you have to find a reason why it should be a lot better, or you're going to go to these other projects, and many of ours are just a lot more advanced as far as the science that we think is there, but they haven't been drilled that much. So a lot of our properties have high grade intercepts, and the idea is we have areas where we think there's a good reason that the grades are going to be bigger, or higher, and the deposits are going to be bigger. So that's really what we focused on. And I think that there aren't that many projects like many of ours. Many of ours already have drill holes with some pretty exciting values. And we focused on those projects that we think are going to turn into big, high margin deposits.
Perfect. Well, I'm excited to see where the 2022 takes everybody. I'm looking forward to seeing the growth at Wind Mountain as well as the other projects. And good luck with the site visits from the foreigners, and hopefully you'll find some new partners to play with.
Yeah,
thanks for joining me today,
Joe. All right. Well, thank you for having me, Mike. Take care.
Bravada Gold is a paid sponsor of the Prospector News. The host owns shares and warrants in Bravada Gold purchased in a recent private placement for investment purposes.